Good morning, good afternoon, and good evening to everyone dialing in. I'm very pleased to welcome you to our webinar, Digitizing Micro and Small Enterprises for Financial Inclusion, Opportunities and Challenges. I'm Sai Krishna Kumaraswamy, and together with my colleague Swati Sahani, will be your moderators for today's conversation. I'm pleased to introduce our panel of speakers who are experts and have extensive experience in financial inclusion and small business finance. In the interest of time, I'm going to keep the introduction short, but I'd encourage our audience to follow them on their social and follow their work closely. We have with us today Payal Dalal from Mastercard Center for Inclusive Growth. Payal is Senior Vice President, Social Impact International Markets, and oversees the center's philanthropic investments globally. Payal manages a portfolio of programs focused on improving the financial resilience and growth of MSEs, and also writes extensively on the entrepreneurial ecosystem. We also have with us Shraddha Modi from Center for Financial Inclusion. Shraddha is CFI's Research Director. She leads efforts to frame research and insights across CFI's portfolio of programs. Most recently, Shraddha led the research initiative to find the impact of COVID-19 on the financial resilience and growth prospects of MSEs. Finally, we're also joined by Anup Singh. Anup is a partner at Microsave Consulting. He is the regional head of MSE's Anglophone Africa offices and also leads the Helix Institute based in Nairobi. Anup is a leading expert on digital transformation of the MSE finance ecosystem. Payal, Shraddha, and Anup, welcome once again, and I look forward to today's conversation. A quick minute on logistics. Audience mics will remain muted throughout the webinar, but we encourage you to please use the Q&A and chat functions on your interface to post specific questions or have open-ended conversations. The webinar will be recorded and shared, and so will the presentation. In our agenda today, CGAP will frame today's discussion for about the first 10 minutes, and then we will open it up to opening remarks from our panelists. We will then have a moderated discussion section and wrap up with a brief Q&A. I'd like to take a couple of minutes to set context for today's conversation. For the past 2 years, CGAP has been exploring the role of financial services in enabling improved livelihoods for low-income households. One of the lenses with which we look at this is micro and small enterprises. There are more than 500 million MSEs globally. MSEs are an important source of livelihoods and resilience for low-income households. They're often very small, informal, and financially excluded or underserved. But the sheer number of MSEs in the world makes them a force to reckon with. World Bank research suggests that formal sector firms with 5 to 19 employees contribute to as much as half of net job creation in emerging markets. This contribution is likely much higher if we were to include firms with fewer than 5 employees and informal sector firms. However, despite their of poor people, MSEs struggle to raise access to finance. They have many bottlenecks that constrain their growth prospects and stability, but chief amongst them is access to finance. Despite decades of efforts, the MSE credit finance gap remains stubborn and worryingly high at about $5 trillion US. However, there is a new wave of technology-enabled business models that show promise and potential to meet the financial needs of MSEs and mitigate this credit gap. The hypothesis runs so. Providers are able to harness innovations in technology like artificial intelligence, big data analytics, machine learning, and API, and they're able to leverage digital data trails created by MSEs as MSEs embrace digital technologies. These could include digital wallets, mobile money, e-commerce platforms, payment gateways, digital invoices, so on and so forth. So combining technological innovations and these digital data trails, they're able to create new and innovative business models, data-driven lending, embedded finance, peer-to-peer lending, and digital banking. But the big question we are exploring today is this. Are MSEs indeed embracing digital technologies in ways that can improve their access to finance? If yes, what are the triggers and what are the opportunities? If not, what are the challenges and what can we do about them? And we situate this conversation within the broader context of primary research that CGAP undertook with MSEs in 3 countries. Before I open it up to our panelists, I will now invite my colleague Swati to walk us through some of the key insights and describe the primary research that we undertook.
Thank you, Sai. So as I mentioned, there's plenty of data that suggests a very strong linkage between MSEs and livelihoods. However, despite decades of research, what we know about the smallest micro and small enterprises is still relatively little. Existing research and data sources exclude very small enterprises, particularly those in the informal sector. Importantly, we know even less about the segments within the MSE universe. So MSCs, as we know them, continue to be considered sort of as a monolith. Whereas we found that actually there are various differences, peculiarities, and nuances that severely impact how MSCs perform in emerging markets, how they grow, who are these MSCs, what are their goals and motivations, what are their financial attitudes, behaviors, experience. Do they believe that financial services are really as important for livelihoods as we would like to think? And what is the role of digitization, both in how they manage their businesses, as well as in how it helps them access finance? And as I suggested last year in 2021, CGAP undertook primary research in 3 countries. It was largely qualitative research that we undertook with 400 MSCs in India, Kenya, and Peru. The main focus of the research, it had 3 objectives largely. We wanted to understand the distinguishing factors that affect the livelihoods and income generation across these, the various MSC segments. And the idea was to determine how different types of MSCs finance and conduct their businesses, how do they generate and sustain livelihoods, and whether there are certain groups like women-owned enterprises that face any unique barriers. The second objective was to understand the role of financial and non-financial services in supporting the livelihoods of MSCs. So we wanted to understand how access to financial services and other business enabling services either positively or negatively impacts their livelihood generation. And finally, we wanted to see if we could provide ways in which FSPs and particularly digital finance service providers can tailor their approach and their offerings, because a segmented approach might allow them to address these segments in ways that they haven't been able to before. We had quite a good cross-section in terms of our sample. So we broke down the sample by MSC size. We looked at 3 segments based on a number of employees. We looked at firms that were with 1 to 4 employees, 5 to 19, and 20 to 30. The bulk of the sample was really based in the 1 to 19 size. And we found that because of the COVID pandemic, a lot of firms that were slightly larger the year before had actually had to reduce in size. We looked largely at 3 sectors: retail, manufacturing, and services. We looked at firms across the spectrum for formalization and digitization. And finally, although we didn't specifically target a portion of our sample with women-owned enterprises, we applied a gender lens throughout our research. We selected these markets largely due to their geographic diversity, and we stuck largely to urban and peri-urban areas. Now, while the findings of the research are by no means definitive or comprehensive, the idea is to try to demonstrate that there is a significant diversity within the MSC universe, and we need to take a more segmented approach to be able to deliver services to them more effectively. And we need to take away the perception that MSCs are a monolith. For the purposes of this webinar, we'll basically focus on 2 key findings that we think are most relevant to this discussion, and we'll use those to shape the discussion that we have with our panelists. The first is, in the wake of the COVID-19 pandemic, a lot more MSCs appear to have embraced digital technologies and DFS. So when we say embraced digitization, they've started moving a lot of their business to online platform to keep their commerce flowing. Some of them shifted entirely to social media platforms, which increased for them the complexity of managing marketing, sales, and the fulfillment of their orders. A lot of MSCs, particularly those that were early adopters of digitization, expressed a lot of confusion and a need for support to understand these technologies better and how these will impact their business in the long term. And there were significant concerns around security. And then the second finding that we found sort of across the board, all 3 countries, was around trust. And this is, of course, most relevant to providers. Sai, could you go to the next slide? So although DFS use has increased significantly, we found that it's been more in response to customer preferences rather than an inherent enthusiasm for digital services. So there remains a significant lack of trust in providers. So despite an increased frequency, many MSEs remain quite reluctant users of DFS, and they strictly manage the frequency of use to limit their exposure. There was a lot of concern around the fact that digital spaces are less regulated than the traditional banks, where they have a lot more comfort with conducting their financial services. MSEs are aware that apps are dynamic and they're ceaselessly changing, so they believe that DFS providers can disappear and they would lose a lot of their valued products. So this lack of agency and control also brought about a lot of lack of trust in DFS providers. For instance, in India, a lot of the MSEs frequently cited fears of being victims of either scams or DFS providers, ill-intentioned DFS providers really scamming them or defrauding them in some way. In Kenya, we heard multiple examples of personal experiences where digital providers had either reached out to their family or friends and in some way eroded their social standing. So there is a lot of lack of trust that needs to be addressed. And if MSCs continue to have low trust in providers, they will continue to limit their usage and treat these providers, particularly credit providers, as lenders of last resort, not really using them for working capital or capital investments. Before we move on to our panelists, we wanted to share with you a short story of one of the excellent ladies that we interviewed. Her name is Divya. She's a beauty parlor owner in India. And Sai and I both really enjoyed speaking to her. So we thought we'd just share a quick video clip of Divya's experience.
I'm Divya Grover, married, and I'm having 2 kids. I'm 39 years old, and my husband, he is a manager in the bank, ICICI Bank. I was working, I was doing my job, and as well as I was working as a freelancer makeup artist. Makeup is the art. I love to do makeup. As a painter do painting, na, face is like a canvas for me. I love to do this. It's my passion. It was difficult for me to manage my house and my kids and my work. Then I planned to left my job and start this business. I was doing only makeup and I started enjoying my work and I started earning money. So I opened my shop and people started to come at me and get services and everything. Usually women get services like facial, waxing, eyebrows and haircut. It is very normal. I need a physical outlet where people can come. So I started my business with a very small shop. I bought that shop 2015. Gradually, I increased it when I started this larger shop. I was doing good. It was growing. People were crazy about my makeup. Till 2019 December, I was too busy, damn busy. It was too good. There was no time to get food or for your own self. Continuously, I have done 20 makeups in a day. I start working around 5 in the morning till 11 or 12. I'm missing those days actually. It's affected by Corona very badly. Because of that lockdown, we are idle. Earlier, I was having 6 to 7 staff, but due to that Corona, now I have only 3 or 4. As Corona started now, so still they were working with me. But when I restarted my shop, then I started to reduce my staff. People are not calling us because of that lockdown. They are scared actually. A lot of people have moved from this area. They have shifted to their own villages because all are working from the home. So they said, why we need to pay rent and everything. If I talk about my suppliers, digitally I pay and second is cash. In digital, Phone Pay, Paytm, Google Pay. And to my employees, sometimes I do NFT, bank transfer or cash. After COVID, the people prefer to do digitally. Earlier, I was getting 60% cash and 40% digitally. Now I'm getting 30% cash and 70% digitally. The phone is very handy. Now everybody is having phone and we are having everything in our phone. So we have our phone ticket, tick, 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 we will pay digitally, phone pay, Paytm and everything. Yeah. It is very convenient and easy. Google Pay is just a gateway. But in a Paytm, there is a lot of option bills and all. So I don't trust Paytm. If they ask me to, link my bank account, so I don't. I've started savings. I really don't believe to take, credit and all. I will order less, but I will not do credit. I don't like it. It is available, but if you will ask for 10,000, if you will borrow 10,000 rupees, we will have to pay 20,000 rupees. Honestly speaking, I'm scared of loans and everything. I don't like to borrow the money from the banks. God knows what you will face in future. Suppose we are not able to pay for a 2 3 months, they will definitely attack on our property or gold, whatever we are giving them to take the money. If I will not be able to, start a huge business, I will not. I will wait for another year. So we have backup. In case we even, invest our backup as well. So I have my family. My family will help me out. After the lockdown or after COVID, definitely I will first attract new customers. I will again start the hoardings, start distribute of pamphlets. After this lockdown, now maybe I will reduce one more people from my organization. If there was no COVID, I plan to hire one more for my makeup. I'm a free person. On a professional level, you are independent, being a woman. You are earning your own money. It is very convenient to run a business rather to into a job. And on a personal level, being a woman, like I get time for myself. Having my own business, if I'm not in mood to work, I'll close my shop and come home. In future, I wish to open a unisex salon. I want a person who belongs to my family. My son now he's 17, so I'm waiting when he will be 19 or 20 so that I will train him in a men's salon. Definitely, he'll grow the business.
I hope you've all been able to get a slice of what it is that we heard from these nearly 400 MSEs in 3 countries. And perhaps the best way to characterize this is cautious, hesitant digitization. There is great comfort in using basic digital payments, but we all clearly heard their attitudes towards credit or digital credit. It's very interesting to reconcile both. And I'd like to bring in our panelists now and begin with Shraddha. Shraddha, CFI recently surveyed MSMEs in 4 countries. I'm curious what you have learned about the pace of digitization amongst these MSCs. What are some triggers, and are there some segments that are quick to digitize versus others? And who's at the risk of being left behind?
Yeah, thanks, Sai. So I want to begin by saying that our survey was a 6-wave longitudinal survey that we began in 2020 to examine the impact of COVID-19 on MSMEs in 4 countries: Colombia, India, Indonesia, and Nigeria. And our service focused on the smallest of small businesses. So 95% of our participants were micro enterprises with fewer than 10 employees. And we collected some data on their business operations, practices, household well-being to understand what types of behaviors and products will correlate with better resilience. And then in 2022, we launched some qualitative research in all 4 countries to understand what prompted their use of digital tools and platforms. And we learned 3 key things from our research. One, digital adoption was often slow, and in some cases, we saw a drop-off. Second, women-owned businesses and smaller businesses were having a harder time with digitalization. And finally, where we saw high adoption was really around social commerce. So let me take those points one by one. One, while many businesses around the world turned to digital platforms to cope with the pandemic, we observed a much slower uptake of digital platforms in our sample. The usage also appeared to be inconsistent. While there was an increase in selling in the early months of the pandemic during the lockdown and the movement restrictions, as the economies began reopening, the trend did not continue, suggesting that these businesses might have tested the products, but did not continue to do so throughout the pandemic. And secondly, women-owned businesses, smaller businesses, were having a much more difficult time. While, for example, in Indonesia, our sample that was predominantly women appeared to be struggling. They had significantly lower smartphone ownership, low usage of mobile money, and low rates of digital platforms usage. And this suggests that even in countries where the digital ecosystem is innovating and developing fast, smaller businesses, rural businesses, women-owned businesses are struggling on their adoption journey. In our focus groups, we also heard from some business owners that they saw limited value of digitalization for their business, and they just didn't see the application for their small business. So it shows that small businesses that are so crucial to the local economies need demonstration models to understand why and how to adopt digital products so then they can assess benefits for their business. But we did see high enthusiasm and adoption around social commerce. Many of the business owners that we spoke to were already using social media and digital payment platforms for their personal use. And during the lockdowns, this led to a natural progression to begin using these platforms, especially WhatsApp and Instagram, to market their products and services, communicate with customers, and reach new ones. Many of these MSMEs, however, relied to a large extent on cash payments and often ended up absorbing the delivery costs. Some business owners were a bit savvier. For example, one business owner implemented delivery service and took advance payments when orders were placed, and this helped him reduce potential losses from fraudulent orders. Another business owner we heard from set up an online store and attracted customers that were located much away from his physical business location. So not only were they new customers, but they were also willing to pay higher prices for his products, which were relatively cheaper based on their more local choices. So these may be small examples on their own. They illustrate how digitalization can add significant value to small businesses that typically have limited resources and are very dependent on the small market area for consumers. And our research does offer hope. Business owners that already had a base of digital skills, access to education, training, found it much easier to digitalize. So upskilling programs, access to smartphones, and just other ways of building digital skills is possible. And we have seen it happen successfully in partnerships with financial service providers.
Thanks, Shraddha. It's fascinating to see there's both hope and there's a pause there, especially in the dropping off in adoption, right? Because one of the things that we're slightly worried about it is this COVID-induced digitization here to stay, or will it drop off? But glad to know that there are things that are working to make sure that this continues. And there are a lot of questions in the chat box, and one of the things that I want to bring in Anup with is we talk about digitalization in fairly broad and blurry ways. Is it the adoption of DFS and digital payments? Is it more broader digitization of business operations? And one is obviously sort of, it lays the ramps to advanced DFS use, right? So Anup, I'm curious, you have studied digitization of MSME operations in several countries. So what have been some key learnings from your research? And could you also talk to us about what are the challenges that MSEs face in digitization?
Thank you. Thank you so much, Sai and Swati, for having me on this panel. And I'm delighted to be here alongside Shraddha and Payal. I'll quickly talk about what MSC does. So we are a management consulting firm focused on financial, social, and economic inclusion of low and moderate income population. So we have been working in the enterprise finance and development space for the last 20 years, and our focus has been mostly on supporting entrepreneurs benefit from the digital platform. Around the COVID-19 outbreak, we researched how the enterprises cope with the pandemic's impact in various countries in India, Indonesia, the Philippines, Kenya, Uganda, Senegal, etc. And when we started looking at it with the focus on opportunities and constraints for the enterprise digitization, what we found out was that the first lesson that the enterprises and entrepreneurs have limited knowledge of digitizing their businesses. The benefits are not salient to the enterprises. They're very present biased. They see digitization as an expense, not an investment to improve their enterprises. Even during pandemic, we saw that there was significantly low adoption of technology, such as the use of social media or online channel for business communication. In 8 countries where we ran the research, we found that only 1/5 of enterprises established any kind of partnership with e-commerce platform or started their own online portal or social media channel. That too, in the urban areas, the adoption of digital channel to boost their business and adapt to changing business environment was much more than the rural area for obvious reasons. The second thing that we have found from our studies is that the approach to digitization at the provider level needs to be tweaked to answer the what's in it for me question for enterprises much sooner. Any digitization that focuses on enhancing efficiency, reducing costs, helping enterprise enterprises manage customers better, that is going to not take up as much as it is going to help enterprises to sell more or earn more from the digitization effort. So in summary, the sequencing matters, like what is it that digitization is going to bring in terms of benefit. Thirdly, what we saw that the digital footprint for enterprises, especially the nano and micro enterprises, is now increasing because of the different activities that are happening on digital platforms. However, we need to think about traditional and alternative digital data streams and their aggregation so that that can be used for better services at better price point. We also found that there are various implied costs that are associated with digitization. So fear of taxman is primary among them. And then the cost of data is another key driver to keep in mind. And lastly, entrepreneurs are very scared of fraud. Any risk event that causes them to lose money would scar them for life. So building trust and confidence in digital approaches is paramount to the whole digitization effort.
Thanks, Anup. That resonates with broadly what we've been hearing too, right? So the trust issue kept cropping up across segments, across gender of entrepreneur, across countries. And a very important point that you made, that they think about this is an expenditure and not an investment. And maybe sort of framing that or probably providing some support there would be very helpful. And Payal, it would be lovely to hear from you from like a funder perspective, right? So you have a robust portfolio of programs that are focused on bolstering both resilience and growth of MSEs through technology adoption. So what are some of the key insights that you have learned from your work so far? And as you talk about that, you also write a lot about the entrepreneurial support ecosystem. So can you talk about some of the innovative partnerships that you're undertaking and how that's played out?
Sure, absolutely. And the benefit of being last is I can just agree with everything that everyone has said. So I represent the Center for Inclusive Growth at Mastercard. We're the philanthropic hub of the company. And as Sai mentioned, we do a lot of philanthropic funding of programs that really help micro and small businesses bolster their resilience and put them back on the path to growth. And our hypothesis is that technology adoption and digitalization is a really important tool. In terms of insights and key learning, I'd say there are about 5 that I would surface, many of which have already been covered by Shraddha and Anup. But the first is the need to blend touch and tech. I know we're in a digital economy, we're in a digital world, but what we have to recognize is that you can't just assume that people are going to make the jump or that small businesses are going to make the jump. Shraddha mentioned the need for skilling. From our experience, what we've seen huge impact with is around mentorship, and specifically peer-to-peer mentorship and peer-to-peer engagement, because that has seemed to be really impactful when it comes to building trust and really helping micro and small businesses get more comfortable. The blend of tech and touch has to be curated for the segment you're serving. And again, this goes to a point that I think Swati and Shraddha both made, which is that we have to be segment intentional. And this is especially true when it comes to women-led or owned micro and small businesses. I think we have to be really clear that the digital divide is real, and not all micro and small businesses can be served by digitally enabled tools because they might lack access to devices or lack access to data plans. And so I think it's really important as we're thinking about digitalization programs and technology adoption programs that we really cater to specific clients, recognizing that not all micro and small businesses are the same. And as I said, I think this is especially true with women-led and owned micro and small businesses. They're already operating at a disadvantaged playing field. And so you have to think about gender intentionality when designing the programs and really think about the wraparound services you need to include. So one of the things that I think funders need to think about more proactively is how we provide childcare for micro and small business owners, or how we might, again, given the trust deficit, how we might deploy peer-to-peer engagement and mentoring. The third thing, which has come up a number of times, Swati and Anup both discussed this, is that trust in a digital world is hard. And what we have found most effective is to really partner with people and institutions that already have relationships with the community of micro and small businesses that we want to work with, and to use them as ambassadors and to use them as a way to gain and establish that trust. And then a couple of other points I'd make, Sai, and that would be that you have to meet micro and small businesses where they are to drive relevance and usage. And so you need to tap into existing habits where possible, rather than really trying to introduce new ones. Our work with Acción has shown that digital engagement is critical for increasing usage of products among customers, and customers who use a digital device more than once a day are 3 times more likely to actually feel confident using that technology for a different purpose. And so again, I think really meeting small businesses where they are is going to lead to better technology adoption. And then the last one, again, both points made by Shraddha and Anoop, is that micro and small businesses prioritize tools that show an immediate ROI. So we did an evaluation of our program Digital in Latin America, and what we found was that micro and small businesses prioritize digital payments and social media marketing tools because their clients are demanding the ability to pay digitally, and social media marketing gives them a sense that there's an immediate pathway to growing their sales. So those are 5 insights that we've seen across our work. And I know you've just asked me a second question around the entrepreneurial ecosystem. I'll keep it brief. But my point, Sai, would be that it's important to do lots of interventions at the enterprise level, but we cannot neglect the entrepreneurial support ecosystem. And so we do a lot of work with microfinance institutions and financial service providers to make sure that they're actually digitalizing as well. So we work with Acción, and we're working with microfinance institutions around the world to really help them think about innovation. So whether that is creating an innovation hub, to digitalizing loan products, to creating connections between digital marketplaces and digital financial services. My first point would be that we really have to think more broadly beyond just the enterprise level. The second point I just make is that you have to make it easy for micro and small businesses. What I see in the field is that there's so many programs and resources and tools for micro and small businesses. And if you're a micro business, you're time poor and you don't have time to navigate. And so we really have to think about how we simplify. And that's a question of coordination among those of us who play in this field, but it's also making sure that we're creating tools that very easily signpost micro and small businesses to the most relevant tools that are fit for their needs. And then finally, the last point I'd make, Sai, is that we really need to take a bottoms-up approach. And so it's so great to hear about the research from CGAP, from CFI, and from MSE, because we really need to think about what micro and small businesses themselves need and want, rather than really taking a top-down approach and prescribing a number of tools and resources that we think will be best to help bolster the financial resilience of micro and small businesses. So just a few insights from our work.
Thanks so much, Payal. I'm very glad that we sort of ending on the note of what can work and what works. So keeping with the theme, I'm going to let Swati segue us into a moderated discussion section and just follow up with a lot of interesting points that you just made in your opening remarks. Over to you, Swati.
Thanks, Sai, and thanks all of you. It's really heartening to see that we all did the research in somewhat different ways, but a lot of our insights and findings are actually quite similar. Anoop, you raised a very interesting point around what's in it for me question when you start thinking about getting MSEs to adopt more digitization, and particularly digital financial services. Now, we found that a lot of our research participants were happy to take up the digital payments, to take up the digital financial services in their personal lives, but much more hesitant to do that when it came to their business or their enterprises. And I wonder if there's something in what you said in your comments there, what keeps them hesitant or reluctant to take those same services that they would be happy to have in their personal life into their business? Is it a design issue? Is there something else going on? What were your findings from your research?
Great question. Thank you so much, Swati. So I think the core difference in the usage of DFS at an individual level versus the enterprise level emanates from the aspects around the overall value per transaction at the personal level is much lower than that at the enterprise level. Similarly, the cost associated with digital transaction versus the use of cash when it is at the enterprise level. And it's also a product design issue, because we have done digital credit assessments here in East Africa several times. And what we have found is that the digital credit products are not suitable for enterprises in their current shape and form. So if we talk about digital credit in East Africa, we have seen that digital credit is instant, although the amount is very small. It ranges up to about $35 per loan, which is hardly meaningful for an enterprise to meet their working capital need. Additionally, the cost of these loans ranging from 6 to 12% per month is too high for the enterprises to generate any kind of returns to be able to repay the loans. And then the tenor of these loans is typically 30 days, which is again too short for the enterprises. They are looking at affordable, accessible, timely credit, which gives them some headroom so that they can churn the working capital a few times before it is ready to be repaid back to the institution. Then there's also a lot of negative media on the practices adopted by digital credit providers, which does not help. I mean, we have seen that there's word of mouth negative publicity that is there. Don't borrow from digital credit lenders if you are an enterprise, because then they will come and usurp your, collateral. They will usurp your business equipment and so on. And last thing is that specifically, if we talk about nano and micro entrepreneurs, they are not confident about their digital skills, and they fear that something might go wrong in the process and they will lose the money. So that's where they're more conversant, and it's easier for them to use cash than use, say, digital payments or borrow from digital credit. In fact, in the video example that you are showing, Divya's husband works for a bank. Still, she is worried about credit. So that talks volumes about how much of financial skills really exist, even at level of Divya.
Very interesting insight. So the product design and the cost benefit analysis, the case hasn't actually been quite made when it actually comes to using it for businesses. Shraddha, any thoughts from you?
Yeah, so just to reiterate what Anup also mentioned earlier, cash is still very important to many of these small business models. And this is actually one of the ways in many of our respondents were similar in their personal and businesses. As customers, they were concerned that the quality of goods that they might receive may not be worth the money if they transmitted it digitally or bought it from an e-commerce platform. And as business owners, they also found that customers were also likely to review the products and promotions online, but then wanted to come into the physical location, inspect the product, and then make the purchase. And they generally paid in cash. So, and we also heard from many business owners about their hesitancy to adopt e-commerce platforms because they were worried about their ability to compete with other larger firms. They were also worried about the generous return policies, and they wanted immediate payments in cash because any delays in receiving payments could have a significant impact on their just management of cash flow and their financial management for their business. And then secondly, digitalization was often perceived to be bringing additional visibility to their business from authorities. So many of the business owners were hesitant to conduct financial transactions online because of the perceived need to operate formally. And they saw this as a costly endeavor. They thought that if they did visual transactions, then they would have to pay taxes. And many of them preferred to have that gray area, and they were working with tight budgets. So the thoughts of these additional costs negatively impacted their outlook towards digitalization. But the most common thing that we heard was just a lack of confidence in their ability to navigate the digital world. And this is what held back many business owners that we spoke to. In fact, 65% of business owners said that they were worried about making mistakes when they were conducting financial transactions using a phone. And more than 40% of them didn't quite understand the fees associated with their accounts. So when they're unsure of how much things cost, they were worried about making mistakes on their own. They didn't know what they could do to report suspicious behavior or fraud. it seems to be a rational decision to limit usage or just avoid digital transactions.
Very valuable insights. Payal, you'd mentioned briefly when you were talking earlier about how you did a lot of work on trust, and you said trust is hard and you need to work with local communities. What else do you think digital financial service providers can be doing to build trust? So our research as well, we found there was sort of this across the board, everyone we interviewed said, yeah, we're not sure if we trust them, especially digital credit providers. They see it as inherently very risky. They worry about what it's going to do to their social standing if they start reaching out to family members. So how do we actually go about building that trust deficit? You talk briefly about working with local communities, but it would be great to hear a little bit more about that.
Yeah, absolutely. So what we have found to work really well, including when it comes to DFS adoption, is peer mentorship and peer-to-peer engagement. And it doesn't even have to be formal. It can be digital. So we have a lot of programs that use WhatsApp groups among micro and small businesses. And so what I find is instead of top down, micro businesses are more likely to trust what another peer micro business has to say. And so I think if you're a financial service provider, thinking about how you can create a cohort of ambassadors and champions who can go out and share their experiences, I think can be really, really helpful. The key that one of the keys that we've seen, Swati, is that the first experience is the most crucial. So if a micro business has a really negative initial experience with a digital financial service provider, or any financial service provider for that matter, trust is gone and it's incredibly difficult, near impossible to reestablish it. So I'd say a couple of things. One is to make sure that first experience is really positive. And secondly, really harness this peer-to-peer engagement and kind of think about how you can create a network of champions among micro and small businesses who can then talk to each other and build that trust.
And Shraddha, when you were talking earlier about the lack of confidence, do you think that's also linked somewhat to the trust deficit? And we'll get into the discussion around financial literacy in a moment, but how linked do you think those two are in terms of the confidence to use the financial services, trust in them and in the providers?
Yeah, no, I think you're absolutely right. And I would also agree with what Payal was saying earlier, that the first experience is so very important. And building trust is easier if there are frequent, understandable, low value and low risk transactions that work. So if a phone call goes through, a mobile money payment to your mom goes through, and when the system is working well enough, often enough, your trust in that system increases. The problem with digital credit is that it's not that frequent. There's often a lot of money involved and therefore a lot of risks. And hence the lack of confidence in trying to access these services. So getting turned down for a loan when you didn't really understand the often opaque terms and conditions doesn't really increase trust. The fear of aggressive collection practices or being reported to the credit bureau, this all creates a trust deficit. And one of the things is that consumers know a lot about fraud, but often they understand very little about what data is collected, how decisions are made by digital providers. More than 40% of the business owners that we surveyed said that they were not really comfortable with the data collection practices of the providers. But underwriting and many other operational functions within financial services are increasingly being digitized. Many of them are now automated decisions, algorithm-driven decisions. And while they can overcome some of the biases from face-to-face interaction, the scale of harm from such a discriminatory algorithm is much higher than that of a biased individual. In fact, last year, my colleagues at CFI conducted research to uncover the challenges related to the use of algorithms. And that research points out that fundamentally, the data leverage for a predictive algorithm can unintentionally reflect some of the existing biases. So what we need to do is test and adapt tools that improve fairness of these algorithms and support responsible algorithm practices. And on the consumer side, we need to ensure that there is proper communication, transparency, complaint processes from digital providers that can help build this trust from both ends.
We have an interesting question from one of our participants that I just wanted to bring in, and I'll sort of throw it open to all three of you before we move on to the last one, which is, have any of you seen examples of DFS providers that have been effective in actually addressing this trust deficit and done it well? Shraddha, any thoughts?
Well, I would say one of the business owners that we heard from received a lot of support from their financial service providers to create, to put his business online. So he received training, he received support in terms of how he can protect his information, how he can, set up payments and all of that, and such kind of partnership beyond just financial help from a provider can really help MSEs along these journey and build that communication and connection and trust.
And I just add to what Shraddha just said, one of the things that we saw happen a lot with financial service providers, especially microfinance institutions during the pandemic, is that MFI started to provide non-financial services. So I was working with an MFI in Israel that was actually sitting down with each of their microfinance clients and coming up with a business plan in the short term in terms of how to survive with COVID. I saw a lot of microfinance institutions within the microfinance center network provide digitalization boot camps and provide financial literacy training during COVID times. And so I do think, going to Shraddha's point, the provision of non-financial services, in my view, has gone a long way in reestablishing that trust so that clients know that their financial service provider is thinking beyond just financial transactions and really about their survival and their resilience and growth.
I want to add one example from the field. So we work with one of the large SME finance institutions in India. And there used to be 6 visits of the loan officers in the period of the loan cycle. And we used each of those visits to have like 5-minute video on a tablet, which was carried by the loan officer. And then both the loan officer and the client would see that video, and there would be question and answers. So these 6 videos were, one, why is it important for you to comply to the local regulation? And the second one was on how do you understand your credit scoring better, and so on. The end result after about 2 years, when these videos reached out to about 350,000 of their customers, was that they started to trust their organization, this organization, much more than they started with. And second, the repayment rate increased quite significantly because they now understood that how not repaying to this organization after borrowing is going to impact their future sources of credit when they need something for consumption, something for school education, etc.
Very helpful insights. That sort of leads me to a connected question around sort of financial awareness and literacy, right? So a lot of what we're talking about here, the confidence, the lack of trust, and how they access the services and their fears of actually using these services around a lack of awareness. They don't always know what's available to them, how to best use this, particularly, and we found in our research, particularly with a lot of our women-owned MSEs and where you had a lesser level of education, there isn't a full understanding of what's available, how to use it best, and how to ensure that they don't get defrauded. So how do you think that can work? How do we increase financial literacy and awareness? And do you know of any scalable models that have worked? Anup?
Yeah, thanks. So I think, if we look at the digital and financial literacy program design and implementation, it faces a dilemma. The dilemma is that we are looking at trying to balance out the cost, effectiveness, and scale. So in-person skilling programs are highly effective. The costs are comparatively high, and such programs are not hugely successful, scalable. On the other hand, digital skilling programs use digital means and they're high on value for money and highly scalable, but have only limited effectiveness. All of us are guilty of signing on to Coursera and others and not completing them. So we need to now start thinking about a hybrid approach, an approach where we bring the phygital model together with the digital one. And we have used it as an experiment in one of the in one of our programs. What we essentially did was we used the in-person training in the initial part, just so that people learn how to use digital technology and tools to learn. And then we kept using the in-person kind of motivation. So Pyle talked about tech and touch. So we used that tech and touch, and we found that the scalability was high compared to the physical model, and also the effectiveness was high compared to the digital model. So I would be a proponent of this digital model. And secondly, one other model that worked was, can we explore the CSR funds of MNOs to start thinking about free data? Free data, and also think about financial service providers. Can we work with them on some kind of device financing schemes?
Very interesting insight. Again, something that we've both heard from the users, but also providers are starting to look more and more at how they can do simple smartphone loans, right? Linked to what else they're already providing. Pyle, did you have any additional thoughts on this?
Yeah, no, I agree with everything Anoop said. I think going back to the gender intentionality piece, what we found is when we did digital training, we had really unequal outcomes when we compared male-led and owned micro and small businesses to female-led and owned. So we did this both in Latin America and in Poland. And we found participation rates among male-led and owned micro and small businesses really high when it came to digital text, from WhatsApp trainings to webinars, but we found women-led and owned small businesses weren't showing up. And so we did a little bit of digging into why. And what we found was that a lot of our women-owned and led micro and small businesses really valued the in-person trainings, not so much because they were in person, because it gave them an opportunity to leave their shop and leave their family household and be a little bit more social. And so the incentive for them was really around the social aspect of in-person training. And so thinking about what motivates micro and small businesses to participate, I think is incredibly important. The other few observations I would make is we found classroom-based doesn't work because learning is kind of in an abstract. And so what we found is just-in-time messaging and nudges work really well. So one of the things we're experimenting with Mercado Libre in Mexico is how we can do financial behavior nudges when there's a sale that's an anomaly. Maybe it's a much higher sale. We are creating a nudge to say, hey, do you want to save 10% because the sale is bigger than normal? And we find that to be a lot more effective than classroom. And then the last thing I would just say is on the, there are lots of different modalities now when it comes to digitalization and training, whether it's SMS, whether it's WhatsApp. And I think you just have to think very much about your audience. For example, when we did a lot of SMS training of micro merchants in Kenya, we found time of day was incredibly important of when you sent the message and what day of the week. And so there are all sorts of considerations you have to take into account to really think about how you maximize impact. And I think that's one of the opportunities for all of us in the entrepreneurial ecosystem. The more we share, I think the more we can do leapfrogging in terms of really maximizing for impact.
Thank you all. And I think that also sort of ties back to what we talked about earlier with taking a more segmented approach. So you know how you're actually dealing with various segments within the larger group of MSEs. I know in the interest of time, Sai, we might want to give audience a few minutes for questions. And we've had a very interesting discussion. So over to you, Sai.
Sure, Swati, thank you. I've been monitoring the chat box and it's very active, and I take great joy in that panelists are answering each other's questions, and the audience are answering each other's questions, which is a sort of peer learning we hope to create through these webinars. I have two questions in the last 5 minutes, and any of you feel free to jump in. First one is, should we think about women-owned MSEs in a very different, intentional, specific way? Especially given that lack of trust seems to be even more deep-rooted within them. And the second is, a lot of the solutions we're talking about, we're looking to the microfinance world, right? That's more analog, slowly digitizing, whereas there seems to be a consensus that the future is digital and it's these fintech players that are going to be disruptive. So how do we get the fintech folks to learn and adopt these solutions, especially at a time when fintech profitability is this opaque thing, like we don't know if they're making money and does this add to their costs. So how do we sort of, make sure that these solutions are carried forward into so-called, quote unquote, the new gen providers? I'll just sort of leave you all with those questions. Feel free to jump in.
Yeah, I might just respond quickly, Sai, on your second question about fintechs and MFIs. One of the things that I'm really heartened by is that because of the pandemic, there's been a lot more partnership between fintechs and MFIs. In some cases, we've seen acquisitions. In other cases, it's partnership. And it's really the fact that MFIs have the trust and have the footprint in the field, and the fintechs have the digitalization. So when you marry the two, you have the digital combined with the physical. So, going back to the tech and the touch. And so I think that's a trend that's really promising and that we should do more to encourage, because that's the way we ensure that innovation is inclusive and that fintechs are truly kind of serving all of the populations that need financial services. And then your first question on should we be intentional in terms of looking at women entrepreneurs? I would say absolutely yes, but we also need to think about intentionality when we think about rural entrepreneurs and when we think about minority-led and owned. And so I think we have to get very comfortable that, again, micro and small businesses aren't a monolith, and we have to solve for all of the pain points that all various segments realize. It's just in our work, a lot of the needs of micros and small businesses that are led and owned by women have come to the forefront because we weren't gender intentional. And so we were just creating unequal outcomes when we looked at impact.
On question one, I would like to put forward two comments. So the first comment is, yes, we need to look at the gender intentionality. We have been conducting some research in Kenya looking at women, micro and small enterprises, and we have found that the social, economic, physical, financial constructs are significantly different. I'll give you one example. So it's not that they're not aspirational per se, but they don't want to aspire much because they feel that the minute the kiosk store becomes a larger store, a male member from the household will take over. So they kind of, have defined the boundaries around the social constructs in which they are operating. The second aspect is that does not mean that everything should be painted pink. I'll stop at that.
Yeah, I would just like to add to what Anup was saying. I think for women entrepreneurs, that in our research, we also found that there are many norms, also their gender roles, that might be holding them back from really taking full advantage of digitization and growing their business. But there is also tremendous opportunity. So we do need to look at their needs and their what is holding them back, the norms and the roles that they have, and that could be related to childcare, household responsibilities, and some of these things were particularly brought to light during the pandemic, but it's important that we don't forget them and keep them in mind as we think about how to bring them into the fold.
Thanks, Shraddha. Over to Swati to wrap up the session.
Thank you, all of you. Thanks to all of our panelists and to all of our participants. I think this has been an excellent discussion. To your last point around gender, I just wanted to take the moment to just plug another CGAP webinar that's happening on the 27th of this month, and we should be sending out invitations for that soon. That will focus specifically on the issue of gender and how women have embraced either digitization and some of the challenges they face. So it's looking at both digitization in their businesses for women that are platform workers, and also how it's impacting their access to financial services. So we'd invite everyone to join. This webinar is actually the first in a series that we hope to continue over the next 12 months. And that will cover some of the more specific topics that we have in our research. Our report should hopefully be out within the next week or 10 days at most, and we'll share it with all of the participants and all of the panelists. We really, really appreciate the time. This has been a fantastic discussion, and we look forward to many more. Please, everyone, take a look at the chat. We've got some interesting comments there, and we've also got some of our participants have shared reports that they've worked on. So great learning sharing that should be happening through these events. Thank you all very much. Thanks, Sai.
Thank you. Bye-bye.
Bye.